Folks, I'm going to tell you 5 quick facts about black bull markets. Now, did you know, number 1, they're New Zealand FMA regulated? Number 2, did you know they have a copy trading service where you can either be a signal provider or copy signals? And number 3, did you know they've got over 26,000 tradable assets, including Forex, crypto, stocks, indices, and even more? And number 4, did you know they offer 500 to 1 leverage? And number 5, if you open up an account today and trade 1 lot a month, they're going to give you TradingView Pro for free. Check them out, Black Bull Markets.
Good morning. We are live. Good morning. We are live this morning. With TRADINGNUT, and we're gonna see how the markets react this morning. What it does, it usually does what it wants to do, so we're gonna watch and see. Can you guys hear me okay? Let me know in the chat. Good morning, Mercy. How are you doing today? Can you hear me okay? Well, in terms of bias on golds, it's pretty easy, I would say. I mean, I use normally one of ICT's methods to get my bias. I mean, he has multiple methods, but this one, he teaches it back then when he was studying. So usually you just plot the 18 moving average on your chart, on your daily. And pretty much it can give you the trend of the market. So as we can see here, gold has been moving up since, I would say, the beginning of the year. We can see now a little bit of retracement, I would say, from May to June, July, beginning of July, we had this push up here. But I would say so far we are still in the retracement. I'm still seeing gold going up to that level back again, 2067. But as for the day, I believe gold might retrace a little bit. Like for example, if we go on a 4-hour time frame, here on the 4-hour, we can see there we have gold dropping hard here after entering this fair value gap here on the 4-hour time frame, and also I think reaching this breaker here. So I'm expecting at least for gold to probably go at this low, take out this low here for this session or today in general. But let's see what it does, even though I believe that it should move up after that, but I'm still expecting gold to go a little bit down there. So for now, I would say from where it is right now to where it is right now to this level, like, yes. So we can have this as a target for this session, or maybe the day. Also, we should know that for today we do have news, red folder news at 10 a.m. So ISM manufacturing PMI and also JOLTS. So we should be expecting a lot of volatility in the market. But as I always said, the market's gonna do what it wants to do. So we're just gonna sit and watch what it wants to do and go along the flow. I don't know if that's okay for you as a bias, Mercy. So usually I start marking up my charts at 7:30 for gold. I also trade other pairs. I mean, like USD JPY, Dow Jones, US 30. But in this moment, US 30 is a little bit tricky for me personally. I don't know, because it's been like rallying up without stopping and kind of mess up with the way I trade somehow. So I just stopped trading US 30 a little bit. I might take a trade on it sometimes, but I just stopped a little bit. I mean, since like 1 week, I just stopped. Right now, I'm trading USD JPY in Asian session and also gold in New York session. What of UJ? Well, I would say for USD JPY, we're currently going up because we have just came from a deep retracement on USD JPY here. As you can see, we've been trending up, and we had here a deep retracement that take out sell side liquidity below this low, and then we have seen a first move up and a second retracement here. That could have been a great trade if you're swing trading, like for example the trade entry for OTE. We have gotten a beautiful entry here or here, depending on your risk appetite. That would be a beautiful trade. The pure swing trading for USD JPY. So I believe that right now USD JPY is trending and going up for sure. I mean, it might always do some little retracements to give the opportunity to others to enter the trend. It might not, because as you know, USD JPY move a lot, same as gold. So it might give a little retracement down there in this fair value gap. I mean, not fair value gap, but other block here, or it might not, but it's going up. And last night I was trading it. We had a beautiful trade, as you can see here. 129 was pretty simple trade based off of a fair value gap. So I start marking my chart at 8 for USD JPY for Asian session, and then as we can see here, a sweep of that liquidity of this equal lows forming there before 8. And if we actually go into the 15-minute time frame, we can see that this sweep of liquidity bring price back to a level of a fair value gap that was created before. Like if you can see here, this was a fair value gap at 19.7. So 1 hour before, we get this big candle here that created a fair value gap. So at 8 exactly, you could have taken that trade, but I'm mostly taking trades after 8, so wasn't interested in that because price might do anything. So I usually take trades on the 1 minute time frame. So trading the 1 minute time frame, and after 8, after seeing this big push down there for those liquidity, and in the 15 minute we see that price has been to a level of a fair value gap, enter the fair value gap and just rebounds. So definitely we have confirmation that price want to go higher. So what we did was looking for an entry on the 1 minute time frame, which we get here. Price go up here, and I mean before we had 2 equal highs here, and then go up here, create another equal highs, which is, I mean, engineering liquidity here. So we know that price will want to go higher, as it just went to the fair value gap on the 15 minute. So that we just wait, and here we had a breakout structure, market structure shift here, and a fair value gap. And if I just pull this out here, you can see how price goes down into it, and just 1, 2, 3, 4 minutes, it just smashed this buy side liquidity, which would be our first take profit. And obviously when I'm trading a session, I usually look at the previous session highs and lows for targets. So as you can see here, this line here was the New York session high, which was, or which would have been the ultimate target for this trade, as USD JPY mostly move in Asian session and London session, sometimes in New York too, but those sessions are my preferred ones. So as you can see here, that would have been a 12 to 8, I mean 12 to 1 risk reward ratio. With your stop loss placement is a game changer in terms of where you want what you want as a risk reward. So this one right here is, I would say, most likely our level of stop loss, because price shouldn't go below this candle. As you can see, those candles have been down there, the body of the candles, of course, they've been down there, and here we could consider this as a sweep of liquidity, as those bodies goes down there before pushing up. So this could be your level of stop loss, but I like to give it a little bit more room with USD JPY, as you can see, because the weak um, can play can mess with your stop loss most of the time. So just to give a little bit more room, I just give it down there. But usually, if I'm trading something that is less volatile, than USD JPY, I would put my stop loss right there because price shouldn't go down there. But with USD JPY, you never know with the week what can happen. So after price hit our first TP, it goes back down to give us a second entry at this fair value gap. So knowing that our bias was long, and then we take out this buy side, which we have entered here again. As you can see, it takes out buy side liquidity again, and then push up with some major retracement. I would say that could have given you another entry here. For example, that was exactly around 9, and here again, entries. A lot of possibilities to enter the market and make some money. But let's see here for this morning how gold is going. Gold. So as we can see, after 7:30, gold was dropping and targeting those sell side liquidity. Usually I look for a trade after 8 on gold. It's easier like that. Marek, you said chat is dead. Not sure what you mean by. You can see the chat or. Oh, no conversation. I believe that's because we don't have a lot of people tuning in yet. I believe it's early in New York right now, 7:49 New York time. So it's very early. Some people might be waiting for 8:30, 9:30. But happy to be with you here, guys. So I haven't introduced myself yet. I believe the name on the live was Jeff. That's my real name, but I prefer to be called Ed. Most people know me as Ed. Marek is asking if I'm trading NASDAQ, US 30, US 500. I do trade US 30. It's one of the pair that I trade, but I'm not trading US 30 for this morning. Um, and I haven't been trading US 30 for a week because it's been a little bit tricky for me personally. It's playing with my psychology because I mean US 30 has been rallying up a lot lately, and with this rally, it prevents me from using my model on US 30. Usually, what I trade on US 30 is the 930 open. Most of the time, I would say 70 times out of 100, 70% of the time, the 930 opening takes out a high, previous high, or a previous low. And immediately after that sometimes, but most of the time, it will get you a retracement at the 62 level or 79 level on the fib, or it would go below 50% of the fib and inside of a fair value gap, and that would be your entry for a long if it take out a previous high, or a short if it take out a previous low. So that is my model on US 30, and it usually works better when the market is not trending that fast, because US 30 has been trending fast. As you know, ICT talks about the six sisters. Like US 30 is the least, I would say, the one that is the less fast between the slowest one between the three, the Nasdaq, the ES, and Dow Jones YM. It's the least, the one that is slowest, and the other ones like Nasdaq and ES has done all the move already, but US 30 is just catching up right now. I believe it might be tracing right now, but I still believe that there's room for it to go higher. So I'm just not interested in going in there, because my model works better in a market that is not trending that fast. Like when US 30 is doing like up and down, is consolidating, I usually have a higher win rate with that model. So that's why I'm not trading US 30 at the moment. I don't trade US 500, but I'm interested in trading futures like ES, on Nasdaq. I might try those out in the future, because I find it a little bit easier to trade like futures than CFDs as the brokers present it. Like when you're trading futures, I feel it's a little bit more classic, smooth. So I prefer those more. So Marek is asking, what's my story? How long have you been trading so far, and what's your methodology? So my story, I have been trading since 2021, I would say. So that's only been 2 years. It's been a bumpy road, to be honest. I have started originally watching YouTube videos, a lot of YouTube videos. At that time, I was not working. That means I had time. I had a lot of time, and it was pretty, I would say, easy for me to be on my computer for like 10, 14 hours a day. And even one day, I remember I spent like 36 hours without sleeping. It was video after video. I was watching a lot of videos, but at that time I didn't encounter yet ICT. I was watching a lot of videos, all the YouTube videos that you could encounter about trading, candlesticks, indicators. I mean, that was my first go at it. I was using indicators. I still use indicators. I mean, not a lot of them, but some, but not necessarily those well-known indicators like MACD or RSI, but some indicators, yes. And I've started immediately. It was at that time that prop firms was really a thing, and I made the mistake to purchase my first 10Ks. I mean, are we looking for gold buys sorry. Alex is asking, are we looking for gold buys or sells? Well, so far, as I always said, we're watching the market. We do have a bias. We think that gold is going to go a little bit lower this morning, but we might take a trade on the long side, or we might take a trade on the short side. It depends on what the market presents to us. Definitely. So we're gonna watch and see. So right now, I would say that gold is playing around with our sell side liquidity that was formed before 7:30, which is there, and it also goes take out the London session low, which formed between, I would say, 3 and 4 a.m. So it's taking sell side liquidity, so we might see a movement up. Same way it might continue to go down, because usually it gives more we have more movement in London, but this morning it was not so much. So let me see here, not so much this morning. Yeah, not so much. So we're gonna wait and see. So as I was saying, I started from the get-go with prop firms. I started with FTMO. I bought my first challenge, and I remember I took a trade on US30. Since the get-go, I was trading US30. Big mistake, because US30 is like the most volatile pair I've ever traded. I mean, after Nasdaq, of course, but US30 is a beast in that sense. So I think I was up like 8% on the account on that trade, and then I became greedy and I didn't take the profit because it was way a lot of money. Like the target was 10%, and then I was at 8%. So I just say, you know what? I mean, it's running. Let's go to 1,000. And I think it was a news that happened, and just price just dropped, and I breached the account at the same time. It was hard. And then after that, I realized that, you know what, I don't know what this is yet. I don't know what trading is, so I need to focus more on getting to know the market. So I kept watching videos, and then finally, I believe in around December, November 2021, I bumped into one of ICT's videos, and then as I was watching his content, it kind of resonated with me. I kind of feel like, you know what, this feels like legit. Like it feels like it can work, because as I was watching his videos and watching the market, I was able to see what he was saying, to really understand like how the market works. And one thing I've learned with ICT is that, I mean, most people take ICT concepts or ICT knowledge as a strategy. But to me, ICT is not a strategy. ICT concept, they are not strategies. It's just the backbone of the market. It's how the market moves, how the market book price, how the market draw to liquidity. It's how the market works. The strategy that might be your RSI, it might be your support and resistance, it might be your moving average. I mean, those are strategies. But to me, ICD is just the backbone of the market, how the market works. Because, I mean, you might consider some of his concept as entry technique, but they are just like how the market works. And if you take any strategies, as I always said, if you take any strategies that you might have, like moving average, if you take moving average, for example, you take the 7 minutes, the simple moving average, sevens moving average, you put it on a chart, let's say on a 1 minute chart. You take your rules are every time make sure that you are in a specific time frame, because One thing is, as I said, this concept or how the market works. If you're trying to take trades any time of the day, you're not gonna be successful. You need to be taking trade at a specific time. Like for example, the New York session, the London session, the Asian session, depending on the period that you're trading. That means you are taking trade that are the most highly possible successful trade. Because at that time the market is open, people are putting orders in, so you have liquidity, you have all the chance for your target to be reached. So you take the simple moving average, put it on a 1 minute chart, and wait for this time. If the price close below the 7 moving average, you don't enter immediately. You look in the price, in the leg price um, that drive the price to close below the moving average, and see if you see any fair value gaps, if you see any order block or any order of its concept. If you see one, once price goes back into the moving average and reaches for those sign, like whether a fair value gap and order block, you just go in the direction. Like if it was closing below, that means price wanted to go. You enter for sell. As soon as it enters this fair value gap or this order block, based on the direction that you had with the moving average, and you just target the most logical levels, like the most recent lows, the most recent highs, and this is a strategy. But I use the moving average to, I would say, to frame the trade. But I enter the trade with ICT concept because this is how the market moves. But because the strategy is the moving average, that's how I frame the trade. But how I enter the trade, because that's how the market moves, I use ICT. So as I was saying, to me, the strategy is anything that you want to use. Anything that you want to use. And ICT is how the market moves. So anything that you want to use plus ICT, definitely gonna work. So as Alexis said, time and price is king, definitely. So as we're seeing here, gold is pushing down. Gold is pushing down. As you know, guys, I am taking a 25K Blue Guardian, and I believe you are familiar with the rules, which is 4% for daily loss limit and 8% for overall loss limit. So we're gonna be risking 0.25% on each trade. Okay, so now after taking sell side liquidity, we had a really big push up with the 8 open. So sell side liquidity has been taken, big push up, and we had a break of structure here. Market structure shift here, and it also created a big fair value gap here. But let's wait and see if it gave us an entry here. We could be targeting this high here. London session high. Those are all targets. That's if it gives us an entry. I mean, some people might have already entered the trade here because that's one of the ICT's model, which is turtle soup, after sweeping out the liquidity here. But that's to me, that to me is very aggressive. I don't like aggressivity. I prefer my fair value gaps or the blocks. I prefer buying on a retracement. So if it goes down there, our trade would look like this. And we could go to 1, 2, 3 for this London high here. So guys, to let you know, I'm in a trade right now. I mean, I have a pending order, buy limits at that level here. Risking only 0.25%. And if we use our FIB here, we can see from this low to this high, our fair value gap is below 50% and around 0.62 levels. And as you know, with ICT, we buy in a discount and we sell in a premium. So even if it only goes down there, it doesn't go deeper, I wouldn't be interested in a buy here, as we would be in a premium considering this range. We are about to get triggered in the trade right now. We still have the spreads. Almost. It's not taking us in here. Still have the spreads. Okay, good. We are in right now. And the thing with trading is, I think Mark Douglas said that, had a lecture about that. You don't have to worry about the outcome of each trade. As soon as you know that you have a system that provide you with an edge in the market, and your edge is not gonna work on 1 or 2 trades. Your edge is not gonna work on 3 trades, but your edge is gonna work on a set of trades that might be like 50, 100 trades. Because let's say, for example, this challenge, which is 4% loss daily and 8%. With 8% of 25K, that's 4% is 1,000. 8% is 4,000. So let's say I risk 0.25% per trade. Let me pull up the calculator here. I don't want to mess this up. I haven't done any mental calculation in a long time. So let's say we have 8% to lose in total on the account. We are risking 0.25% per trade. That leaves us a room of 22 trades to lose in a row before we actually lose the account. And with those 22 trades, let's say we win 50% of them. Winning 50% of those trades would give us like 16 losing trades. With 16 losing trade at 0.25%, that would put us at minus 4%. And let's say we win 16 trades, that would put us at factoring in the fact that we normally target a 1-to-3 risk to reward ratio. That means every trade will lose 0.25% while we make 0.75%. So let's say we win 50% of those, which is 16. That would be 12%. So 12% minus 4%, that's 8%. So let's say we have a win rate which is 50%. So we would need to lose, if we're taking 32 trades, we would need to lose half of them and win half of them to pass the challenge easily. So it would be easier if our normally if our win rate would be higher, or if our win rate or risk reward would be higher, it would be easier. But we're just using those as numbers. Seems that we're gonna lose this trade. As I'm seeing here, there's no confirmation that the fair value gap will hold. Yep, it's about to take us out. But anyway, as I was saying, our rules for this challenge is very simple. First of all, we're gonna be risking 0.25% for each trade. Secondly, as soon as we reach a 2% buffer, we're gonna bring our risk up a little bit to 0.50% per trade. If after reaching 2% and then we reach 0.50%, we'll lose, we're gonna dial down back to 0.25% per trade. If we don't lose, we're gonna keep risking 0.5% till we get to 4%. Once we get to 4%, we'll increase the risk to 1% per trade. And from there, I think getting to the from there, I think getting to the 8% should be easy. But if we keep, any trade we take and we lose, we are at 0.25%. We don't risk more than that if we're losing. If we're winning at 2%, we go higher to 0.50%. At 4%, we go higher to 1%. After 2%, if we lose, we go down to 0.25. After 4%, if we lose 1%, we go down to 0.25%. So that's the rule. And also, yeah, Alex is saying NFP week is, well, it can be crazy week. Definitely. And boom, we have been taken out, I believe. Yes, we have been taken out, unfortunately. So we're down 0.25% on the account. And one of the most important rules I have in trading is I don't take more than one trade per session. That means this was my trade for New York session and I'm done. Like, doesn't matter if there's another trade on the chart. Doesn't matter if there's 10 other trades on the charts. I'm done for the day. That's my how can I say that, risk appetite for each session per day. I'm willing to lose 0.5% on a challenge, because I remember, I'm currently funded with another prop firm, and I remember when I was trying to pass this challenge, one day I lose like 2% on a single trade. And then I said, you know what? That's okay. Let's leave it at that. I don't want to lose any more than 2% for the day, because I was being aggressive on this challenge, because the time limit was approaching and I had to pass it by that time limit. So, oh Jesus, that's crazy. As you can see, guys, it has been playing with our stop loss and it took us out. And now look at that. That's crazy. No way. Anyway, this happens a lot. And mean, it doesn't mean it's gonna go higher, but if it goes higher, it's not going out higher anyway. So as I was saying, I was risking like 2%, and I just stopped for the day. And then I did see trades for the day, but I said, you know what? I'm not gonna risk more than 2%. That's the thing, because most of the time we take a loss and then we say, hey, here's another trade. I could make that back. You see, I could make that back right now. But the thing is, you're not in the right mental state to make that back, because right now you're not trading to make money. If you see, the first trade, when you take it, you were taking the trade out. You know what? I'm gonna make money on this. But the second trade, if you take it, your mental would be, shit, I'm gonna make that money back. I'm gonna like replace that money that I just lose. That would be your mental. Not I'm gonna make money, but I'm gonna replace that money that the market take from me. I'm gonna take it back. It's like a revenge, as people used to say. It's revenge trading, and that's not good, because when you're taking revenge, you don't think clearly. You don't think methodically. You don't use your good sense. You just, you know what? I'm gonna take that back. It's like a fight. For example, you went into a club and like someone just, walk up to you and put his fist into your mouth. That's hard. And you know that in clubs fights can happen. That means that's an expectation. But you were pretty sure that you didn't bother anybody, you didn't do anything, and you didn't expect to receive a fist in your mouth like that. So what you do, you don't look at the guy. If you don't look, if it's 6 feet tall, big body, and gym guy, you don't look at that. You don't try to see the difference between you and him. You don't try to measure if you can tackle that guy, but you just go out and try to get revenge. And what happened most of the time, if the guy is bigger than you, which the market is bigger than you, you're gonna take 1, 2, 3, 4 more fists in your mouth, and then you won't be able to do anything about it. Let's say you were risking 1% per trade. After 5 fists in your mouth, that's like cow, because you would breach the max daily loss on the account for prop firms. So what you do is, instead of just go back at it and put a fist in his mouth, you stay back. You take your fist and you stay back. You just lay down. Maybe get some. Sorry, guys. I also speak Spanish, so the word that's coming to mind is yellow, because they said that in Spanish, but I can't remember the English word, which is ice. Yes, ice. So you take some ice, you put it in the mouth, and you see, is it better for me to like go and get this guy a fist in his mouth, or is there another strategy that I could use to get back at him? Not that I'm gonna let it pass because I receive a fist in my mouth without doing anything. I'm not gonna let it pass, definitely not. But at the same time, I need to be strategic. I need to know how to get back to this guy. Maybe he might be bigger than me in size, shape, but I might be in a higher position than him. And I might be, let's say, for example, we're working the same job, the same company, and I'm in a higher rank than him. I could definitely give him more work to do for the rest of the month. That's a way to get back at him. It may not be a fist in his mouth, but it's my revenge. That's the same The same thing with that's the same thing. Alexis is Mexican. Great, great, great. I mean, I don't speak Spanish really fluently, but I speak a little bit Spanish because I'm living in Dominican Republic. But I'm not Dominican. I'm Haitian. I originally speak Haitian Creole. I speak English. I speak French. And I understand clearly Spanish, but I speak a little bit of Spanish. Okay, great. So, as I was saying, giving him a lot of work to do for the rest of this month is a better strategy than giving him a fist in his mouth, because definitely it's not gonna do it for me because he's bigger than me. So it's the same thing with the markets. So after this 2% loss, I just leave it at that and just go back the other day. And the other day, I got a trade that was so perfect. I was risking 1%. I did 4%. The trade was like perfect. I recovered the loss from yesterday. I was not in a mental state where I was saying, you know what, I gotta get this money back. It was a whole new day. It was a whole new day. And I wasn't even thinking about the loss that I got yesterday. I just entered the trade as if I was studying new. And that's the mental state you need to be in when you're trading. Like, a loss is a loss, and a loss does not mean that you're gonna lose overall. As I just showed you with this account, let's say I'm risking 0.25%. I might be losing 16 if I'm taking 32 trades. I might be losing 16 of those trades, but only winning 16, like half of those trades, would help me pass the account without increasing my risk. I'm not increasing the 0.25%. I'm only risking 0.25%. And that's it. With 0.25%, I can go from 0% on the trade to 8% by losing 50% of my trade. And the thing that is hard with trading is you never know when those 16 losing trades is gonna happen. You might lose 8 trade in a row, like 8 trade back to back. You might lose 16 trade in a row, because I can tell, because right now I'm in a big drawdown on my funded account, minus 6%. I have room for 4%, minus 6.17%, because I really dialed back my risk. Right now I'm only risking like 0.1, 0.2, 0.3%. So you might lose 16 trades in a row, and that's okay, because to get back to 16 trades, let's say if you lose 16 trades in a row, that's minus 4%. So you would be needing you would be needing 5 trades, I would say. I mean, if you're risking 0.25%, making 0.75% per trade, 1 to 3 risk reward ratio, you would be needing around 5 to 6 trades to get back in. Is it 0.75 plus 0.75? It's like 1.5%. So that means 3%. Yeah, around 5 trade, 5.5. So around 5-6 trade. You would need to get back. So you lose 16 trade, and in 5 trade, you back at break even. That's what trading is. So that's why you don't need to be bothered by the outcome. You don't need to be bothered by the outcome of one single trade, but instead focus on the strategy. Focus on the set of trade instead of one single trade. Focus on a set of trade. That is better. Definitely better. So I wanted to share with you. Let me stop the screen here, and let me try and give you another screen. Okay, so I usually use Notion to do my trading journal, to journal my trading and set my goals and plan. Because when you're trading, you gotta have a goal, you gotta have a plan that's well defined and everything. So as you can see, for this challenge, the goal is to achieve 8% in the first phase and 4% in the second phase, which is a total of 12%. And the trading style I'll be using is day trading, focusing on Asian session for USD JPY and New York session for gold, or US 30, maybe US 30, but definitely gold. And the trading criteria, because as a trader, you might have many strategies under your belt, on definite number of strategies, but each of them might be working in a better way in certain period of the year, the month. As I said before, I'm not trading US 30 right now because my strategy is not responding well in a highly trending market. It's better in a market that is consolidating. I mean, not consolidating on the 1 hour or 4 hour, but consolidating on the daily, for example. It's not working good when I'm trading in a market that is trending, whether going short or going long. So I just stopped on US 30 for a while. So that's why you need the trading criteria. What are you using? How are you trading? For example, if I was focusing on US 30 in my trading criteria here, I would add 9 open, taking out most recent low or most recent high, entering on a fair value gap or fib retracement and stuff. So right now, you see I'm utilizing order block, fair value gaps, fib retracement, breakers as trade entries. Those are my trading criteria, and I never say that. I used to see people saying that they only gonna take trade that gives 1 to 3 risk to reward ratio, 1 to 2 risk to reward ratio, 1 to 4. I don't choose the risk to reward ratio. I just know that most of my trades give me a 1 to 3 risk to reward ratio. That's the average. But on USD JPY, mostly I've seen trades giving me 1 to 9, 1 to 7, 1 to 12, as I've shown you this morning. And it happens sometimes. But the thing is, with those high risk to reward ratio, you need to have the ability to be patient. And this doesn't come easily. One thing that you could do with those high risk to reward ratio is to take partial profits at your initial target, which is, let's say, 1 to 3. You take partial profits, but I don't like it. I mean, it's good when you have a funded account. Definitely good when you have a funded account, because the goal with a funded account is to try to grow it slowly without losing it, to make money on it. The goal is not to achieve, you don't have a ceiling over your head. With a challenge, you do have a goal, specific goal to reach. You have to make 8%, you have to make 4%. I mean, okay, but with a funded account, you don't have a goal. I mean, you do whatever you want. You do how many percentage you want. You want to do 2%, that's you. You want to do 16%, that's you. So with those high runner on a funded account, you could take partial at, let's say, for 1 to 2, 1 to 3. But with a challenge, you need to have the ability to be patient and wait for the final target to hit, and not moving your stop loss. Definitely, I wouldn't advise, if you're trading USD JPY, you entering a trade and move your stop loss early. With USD JPY, Forex in general, you could be in a trade and a trade move from 1 to 1 to 1 to 6 risk to reward ratio. It goes back in your entry to give you a second entry, but if you had moved your stop loss to break even, you would have gotten out, while the trade go back again and give you a 1 to 12 risk to reward ratio. That means it gives you two trades, 1 to 6 and 1 to 12. So if you were to move your stop loss to break even, you would lose. You wouldn't be able to re-enter because you would be afraid to lose again. You would say like, wow, it just went from 6% to 1%, from 6 hour to 1 hour. So I'm not sure it's gonna go back to 6 hour. I'm not gonna re-enter that. I just lose. Not lose, but miss an opportunity in a way, miss to capitalize on the opportunity because you have moved your stop loss to break even. On USD JPY, Forex in general, I wouldn't recommend moving a stop loss to break even if you were in a, I would say, if you are in a challenge, I wouldn't move my stop loss to break even. I know I'm okay with the risk I'm taking. Like for example, on that trade on USD JPY, I didn't take it on this challenge, but I'm doing other challenge at the same time. So on that trade, if I'm risking 0.25%, I'm okay with losing 0.25%. And the fact that I am okay with losing 0.25% made it more easy for me to wait for the 1 to 12 risk reward ratio. And guess what? With 0.25%, 1 to 12 risk reward ratio, that's around %. So in one single trade, you could have made 3%, 0.25% per trade, increasing to 0.5% once I reach a profit as a buffer, and at 4%, risking 1% per trade. And in terms of position sizing, it's like stop loss gonna be based off the risk, which is 0.25%. I normally use trade panel to take my trade. It automatically calculates my lot size based off of my stop loss and take profit and stuff. Because I've realized over time that calculating your lot size or just entering on a lot size just like that, it doesn't allow you to really manage your risk. And as I'm trading on the 1 minute time frame, I have to be fast at entering trade, doing execution. That means I don't have a lot of time to calculate lot size and stuff. So I do have to use, I would say, a program for that to calculate my lot size based on the amount of money I want to risk or the percentage I want to risk. That's better. If you are trading the 1 minute, I really would advise you to consider using one of those. There's a lot of those out there. I don't recommend any personally, but using one of those would definitely be a great thing. And we have trade frequency, which is one of my main thing about taking a challenge is not over trading, not even trading, and doing everything by the book. Then to take one trade per session, equivalent to approximately 2 trades per day across both sessions. That means 1 in New York and 1 in Asia. That's simple. And we have our trading journal, Utilize the Blue Guardian dashboard to track trades, win rate, risk to reward ratio, etc. And also maintain a personal trading journal, trades, notes, and reflections. So, and we have flexibility. Stay open. That's one thing. When you're trading, you gotta stay open to adjust trading plan based on evolving markets, condition, and strategy performance. That means one thing, you gotta be on the chart a lot. I'm not saying you gotta stay on the chart all the time, but a lot is subjective. A lot for me might be 1 or 2 hours. A lot for somebody else might be 4 or 5 hours. A lot is depending on the person, because I might spend like 2 hours on a chart and already get a feeling of what everything is doing, but you need to stay like 4 or 5 hours, or maybe you need to stay for 30 minutes. It really depends on the person, but you need to be aware of what is happening in the market. Definitely be aware of what is happening in the market. So in total, that's my trading plan for this challenge. And also we have the Blue Guardian 25K trading journal. So for today, we have traded the New York, and that's gold. And the thing is, in my journal, you can see we have bias, we have directions, because not all the time you're gonna take a trade that's in the same directions as your bias. As I said earlier this morning, my bias for gold was short, but the trade that I take was a long trade, and the time frame was 1 minute. Entry strategy was fair value gap. My risk to reward ratio, my risk was not that much. Sorry, I didn't. That was 62. $62.5. That was 62. And the entry price for the trade was 1953.52. My stop loss was at 1952.25, and my lot size was 0.49. The risk to reward ratio that we were aiming for was a 1 to 3, and the outcome was a loss. I did some mistake here. The outcome was a loss. And as for the trade screenshots, you can definitely go here in trading view, and you can whether download the image or copy the link here. That will give you this, and then you just add the link here. And boom, that was our first trade for this challenge. It was in New York, so we have definitely record that trade. That's one of the things that I like to do, record my trade, just to be able to be aware of what you're doing wrong and what you're doing right. Let's say, for example, after the week ends, I got in my journal and I see that I took let's say 5 trade for gold and 5 trade for USD JPY. I lost all the 5 trades on gold and I win all the 5 trade on USD JPY. Guess what I'm gonna do next week? Next week, if I have 10 trades, I'm gonna still take my 5 trades on USD JPY, and I might decrease the number of trade on gold. Because what losing on a pair means that you're not catching the dynamic of the pair at the time that is trading. Because at a certain time, you might have a good feel for the pair. You might see where it's going. I mean, you might be a good analyst, but sometimes the market is just tricky and you cannot catch it. You cannot see what it wants to do really. So you just gotta be aware of what you're doing wrong, what you're doing right. And to be aware of what you're doing wrong or what you're doing right, you need to be journaling your trades. And that's what we just did with our first trade on that challenge. I hope you guys enjoyed the session today. So I believe we should be done for this session, because for today. Yes, because Asian session is a New York session, like this New York session and later Asian session will be on the same day for me, even though for some people the day changes. But my Asian session is at 8 p.m. today, so I will be trading Asian. So definitely that was our first trade on the challenge, and we are down right now. When I'm looking at the MT5 right here, let me see if I can show it. I definitely didn't risk $62 on that trade. I definitely didn't risk that much on that trade. It seems. So as you can see, that's my MT5. I'm currently at 24,948. And if we look at the trade that we took, the outcome was only minus 51.45. I don't know, because normally as you can see here, the risk was 0.25%. It gives me a lot size of 0.49. The trade panel automatically calculate all this for me. I don't need to do it by myself. It makes it way easier. Like for example, when I was taking the trade right here, what I did was pull up this line, buy, and then I just definitely put the buy. Right now it shows as a buy stop because price is below there, but when price was up there, it was a buy limits. And then stop loss here, take profit here. As you can see, it automatically let me know your lot size. If you're risking 62.23 USD, your lot size should be 0.49. And it told me exactly my profit would be 193.55. So it automatically calculates everything for me. So it's way easier like that. But as you can see, I'm down even less than I was expected, because it shows me that it was 62, but in fact it was only $51.45 as a total. And commission, not bad, $2.94. Okay, great. So I am planning to do some lecture, I would say, about some topics in trading in the future live session. We can talk a little bit about risk management in details and trading plan, market analysis, emotional discipline, trade execution, and position sizing, trading psychology, record keeping, and adaptability. I might be doing I might prepare some lecture on those, as well as I know that everyone on this channel is still learning, as I am still learning. That's one thing about trading. You never stop learning. You're learning from your trade, you're learning from somebody else's trade, you're learning from your loss, you're learning from your win, you're learning from everything. So that's one of the reason I love trading. Like, you're constantly learning and constantly improving. There's never a ceiling, there's never a limit. You are your own limit. You want to make $10,000 with trading, you're gonna make 10,000. You want to make 1 million, you're gonna make 1 million. You want to make 30 million, you're gonna make 30. You want to make billions, you're gonna make billions. There's never a limit. That's what I like about trading. If you master the skills, you can do it. Well, guys, it's been a nice chat with you all. I think I'll leave it at that for today. As I said in the beginning, my name is Jeff, and I prefer for me to be called Ed. On my social media, you would see I am Ed Cadet. I hope that in the future live session, we'll have more chit chat and more in-depth conversation about trading and taking more trades, and definitely passing this challenge, because I'm not planning to lose. Oh, for the trading manager, I think I purchased it directly from MQL5 there. I mean, you would need to create an account on MQL5. Normally, to create an account, you would go there. Normally, I'm currently logged into my account, so you wouldn't see that. You would see that you need to create an account or log in, or you can just go to MQL5 website and you would be able to log in there. And then when you get there, you will be looking for something called Trade Panel. Expert Advisor. Trade Panel. MT5, no, that's market. You would go to, I mean, normally on the website, you would go to market and you would go to here. Here is the name. It is called Trade Panel. It's already open, so yeah, it is called Trade Panel MT5. Okay, here it is. That's how it looks. I think it's $50 if you want to buy it. That's what I paid for it. I mean, there are obviously others in the market, but I don't know about them. I just choose this because I like the way. I think I saw a trader using it, and then I like the way it is. Simple, not difficult to use, very straightforward. So I just got this, $50. So that's how it looks, because there might be multiple one called like that, or I don't know. So that's how it looks if you want to check it back here. Okay. So guys, thank you again for tuning in. Hopefully we'll see you next time. I'm not sure yet when it's gonna be, but definitely not this week, I would say. Probably next week I will be live, maybe New York session or Asian session. We'll see. but you will definitely see the notification on the channel. And also, if you haven't done so yet, you can give us a like on this video and definitely hit the notification bell to receive notification about any future lives. So guys, again, thank you and have a wonderful, beautiful, calm, successful day. Bye-bye.